Hi there, y'all. Made it back. Once again, I'm so sorry about that last live video I did. We were having some technical difficulties. Let's hope that they do not happen again. Once again, in case you didn't catch it the first time, my name is Austin Brown. I am the co-owner of Raptor Realty Group. We are a real estate group based out of Lubbock, Texas, and we service the entire West Texas area. Now, this group was founded by Zach Conder, a really good buddy of mine. He's the founder, owner of Raptor Realty Group. I wouldn't be able to do any of this without him, so of course I have to give him a huge shout out. So this video is going to be going over financing, mostly mortgage questions that I'm sure you have always wondered, especially if you've been shopping for a house. I figured this live video would be the best way to get your questions answered. And I do have a printout of some questions right here that people have told me to go ahead and ask. So I'm going to be joined on this live video by a good buddy of mine, Tyler Hogan. He works for Prime Lending. He is a mortgage loan originator, and let me tell you, he is amazing at what he does. So without further ado, let me go ahead and see if I can get him on this live video, and we will get started. Can you hear me, Tyler?
Yeah, I had to get it on my phone, man.
Dude, that's what I had to do as well. It wouldn't work on my computer, so.
Love it.
No,
Technical difficulties for a bunch of millennials. Ain't that something ironic? Yeah,
it happens. It happens. Dude, that's what I
no doubt. That's funny. Heck yeah. Well, I heard your little intro there about Raptor Realty Group, man. Um, I'm glad y'all are here. I'm glad y'all are just killing it and rocking and rolling with everything you got to serve people of West Texas and just get them a dream home, man.
Dude, it has been a true blessing, and honestly, I can't be more thankful. But
Yeah.
Taylor, go ahead and tell us a little bit about yourself and what you do.
So my name's Tyler Hogan. You might also know me as the Lone Star Ginger Lender. Um, I have to thank my wife for that little tagline. It's definitely not mine. I'm not creative enough for that. But you can see the deer in the background behind me. Love to hunt when I'm not doing home loans for people. I started doing this almost 2 years ago. It was a change of pace from what I was in, which was account managing chemical companies in the oil field, but it's been a blessing for our family. It's allowed me to be home more, to be a dad, and man, it's fun seeing the smiles on people's faces, which I'm sure you get to see a lot of as well
I
when we
agree.
get them to the closing table, and they're like, "Is this for real?" And I'm like, "Yeah, this is for real."
It's always the best feeling in
So
the world, right there, man. Always.
absolutely,
Well,
two of my favorites are the VA loans and also the down payment assistance loans because I mean those people usually come to you with I mean you're their Hail Mary, you're their final prayer.
yes.
Like, can we even make this dream a possibility? And to be like, can not only can we make it, it is like this is happening. Those people are just they're real fun.
Dude, and going into that as well, in fact, I've already told the people this is going to be a Q&A type of session. You know, there's
Gotcha.
always people who have questions about mortgages, so I figured why not? We'll do a video together and we'll answer all their questions.
Yeah,
So
let's do it.
that's actually going to be the first question that gets asked on here is, what are the different types of mortgage loans available?
So you've got the standard for, if you will, USDA loan, an FHA loan, a conventional loan, and a VA loan. Now, each loan has a county limit. Um, they're rising again next year. A conventional loan is over $700,000. After that, it's no longer conventional. It goes to jumbo loan. So there's also your jumbo loan. Um, FHA loans, the limits are, I think they're rising up to 400 and something thousand. And then your USDA, we also do renovation loans.
What
So,
are
and we
renovations?
So it's a way you can either, if you own a house, own a property, and you want to renovate it, instead of taking a cash out refinance, you can do a renovation loan. We can go that route. We can also wrap a renovation loan into a purchase loan.
Oh, wow.
So let's say you love the layout of the home, but you wish it had hardwood floors, or those awesome plantation shutters, I think is what they're called. That was a craze when I was a young kid. um, you can wrap the renovation of the home into the purchase, and so you purchase it like a regular house, and then they've got 45 days to do the hardwood floors to make it your dream home.
Oh, wow. So, all right. Well, Tyler, the next question that we have that someone asked is, what are your down payment options, and are they different depending on the type of loan you get?
Yes. Awesome. Great question. Down payment options are different based on the loan you get. So, for example, USDA and FHA are a minimum 0% down. I say minimum because you can always put money down if you want to. FHA is 3.5% down minimum. Conventional is usually a standard minimum of 5% down. And then you've also got, we have a 3% conventional loan. There are some extra qualifications for that. Usually it's based on income and things like that. And then you've also got your jumbo loan, which those are 20% minimum down payment.
Gotcha. Now, this is going to wrap into that last question as well. And this is something that we as realtors do get asked a lot. Is there really such thing as down payment assistance? And if so, how does that work?
There is, luckily enough. So there are several programs you can get, whether you're going with any of the 4 standard loans. You can get FHA, VA, USDA, or conventional. There are down payment options. Now, every down payment option is going to be based off of 2 main criterias: your credit score and your income.
Gotcha.
Each county has a different income limit. With me being from the Permian Basin, for example, I know Midland County is like $119,000 of household income to qualify for down payment assistance through the TSHAC program. And I think Ector County, which is Odessa, 10 miles away, was like 93 or 96. So they definitely vary based off of county. But those are the 2 main criterias: is your credit score and the income. Usually your credit score needs to be above 620.
620. Gotcha. All right. Well, Tyler. So as we know, interest rates have been insane this year. Sometimes even over 7%.
Yes.
Another question that had been asked is there a way to lower your interest rate?
There is. There are several ways you can do that. One of the most common ways right now is to do what's called a 2-to-1 buy down. So what that is, we'll use simple math. Let's say the house is $200,000. Well, what we try to I'll use me specifically. What I try to coach people on is, instead of offering $190,000, why don't you offer 200,000, get seller concessions, because that 10 grand is not going to save you much on either down payment or your monthly payment. It's just not.
Gotcha.
But if you offer the 200,000 and get seller concessions, we can use that toward a buy down. So what I mean is, we buy the rate down. If your given rate, which is the given rate based off your credit score and your credit risk profile, if your given rate is 7%, on the 2-to-1 program, the first 12 payments will be at a 5% interest rate.
Oh, wow.
The next 12 payments will be at a 6% interest rate. And then after that, you go back to your 7% interest rate. But the good news is, by the time year 3 gets here, we're truly going to see better rates than we are right now. So you just refinance your house.
That is awesome right there.
That's the most easiest way to put it, man.
Well, perfect. As we get into mortgage talk and stuff like that, of course, there are vocabulary words that some people may not know what it means.
Yeah.
The main one I get asked is, what are points?
So points are fees you pay a lender to get a lower interest rate. bottom line, it's based off of how much house, size of loan, things like that. You know, if you're buying a $150,000 house and you have a 7% interest rate and you want to buy down to a 6% interest rate, that's going to cost you a lot less money than if you're buying a $500,000 house and you've got a 7% and you want to go to a 6% interest rate.
Gotcha. Another thing, mortgage insurance. I get asked, is it required? Is it not required? Do I have to have mortgage insurance?
Yes. As long as your house value is above $80,000 on your loan. What I mean by that is if you have a $100,000 house and you owe $95,000, you will have mortgage insurance. If you owe $78,000, they will automatically cancel it. But if you paid it down to 80, you can request it to be canceled.
Gotcha.
Outside of FHA. FHA is tricky. It's on there for the life of the loan.
Okay, so FHA, it's on there the entire life of the loan. However, other loans, you can request it to be off once you hit that 80% mark.
Yes.
Awesome. On to the next question. This one I got asked just this morning, actually. What does my credit score have to be to qualify for a mortgage?
12 to 18 months ago, it could have been a 580, 585. You can still do those based on, there are other criteria. How much money do you make a month? Do you have reserves, which is a simple way of saying how much money are you going to have left to your name after you pay for your down payment of your house? What we're really seeing is Fannie Mae and Freddie Mac, which are the two of the governing bodies of mortgages. They're really kind of tightening up ever since interest rates rose a little bit about 5 months ago and continued to rise. If a loan has a credit score below 620, they're really starting to get pretty sticky on requiring a lot of extra things. So we can work with 580, but I always suggest try to get to 620. One, it helps your interest rate, and two, it's easier to get things done for you.
Yes, TJ Murphy, you are right. Most builders, well, hopefully most builders, the builder I work with, that's TJ Murphy right there. Awesome dude and builds really high quality houses. He offers builder credits, and he'll help you lower and he'll help with down payment assistance as well as closing cost assistance.
That's beneficial, and honestly, that helps him market his homes better than it does just lowering the price.
Exactly, and it helps the buyer tremendously as well.
Yeah, he's doing a good job for his buyers, so kudos to him for doing that. Absolutely.
Now, this is going to tie into that last question I asked you, but what exactly does a mortgage lender look for when approving you for a mortgage loan?
Okay, so a lot of acronyms there, but we'll try to shorten it up. So essentially, you need a qualifying credit score first and foremost. That's just standard. I'd say 580, but shoot for 600, 620. I saw somebody commented, is 620 kind of the minimum? It's not the minimum. It's just easier to get loans approved if you are 620 or higher. For down payment assistance, 620 is the minimum, yes. So back to this, we look for credit score. We look for assets, which is money that you have available.
Gotcha.
Because you're going to have to cover down payment and closing costs. Even if you get a VA loan or a down payment assistance loan or a USDA loan, you're still going to have closing costs. So you've still got to show a little skin for the game. And then we look at your debt to income ratio, which is based off of your income and your liabilities.
Now, I would have to say that debt to income ratio has to be the most important one right there.
It does for a lot of reasons. Conventional loan, if you go over 50%, you're good luck getting an approval a lot of times. So what I mean by that is if you have $5,000 a month of income before taxes and your current payments monthly plus your new house payment are at $2,500 a month, then you're at a 50% debt to income ratio.
Gotcha.
So that's you divide your debts by your income.
All right.
And hopefully the debts are a smaller number than the income.
Yes.
Hopefully.
Next question. This is getting towards the end as well. What is the difference between a fixed rate mortgage and an adjustable rate mortgage, also known as an ARM?
Yep. So there used to be a lot of differences. One of the major things that happened in 2008 was people sold adjustable rate mortgages, and then the housing market crashed, and they were stuck with a loan. They used to have what's called prepayment penalties, which meant if you refinanced your house or sold your house and paid it off early, you paid a penalty.
Oh.
But now, an adjustable rate mortgage or an ARM is considered a qualifying mortgage, which means there are no penalties.
Gotcha.
TJ, they're not necessarily terrible. Right now, an ARM is a great product because you've usually got 5 or 7 years before it's going to adjust on the first time. With interest rates where they are, if somebody can put down 50 to 20%, they're going to get a better interest rate because an ARM starts out lower and then it adjusts. But by the time that ARM adjusts, you're already going to have a lower interest rate, so you can just refinance to a fixed rate at that point in time.
Yes.
So a fixed rate is fixed for 30 years, 15 years, 20 years, 25 years, whatever term you choose. And then adjustable rate mortgages adjust based off of certain factors. They have a floor that they can go up to each time it adjusts, and then overall. And then it only adjusts after 5 or 7 years. So they're not going to adjust just because rates go up. They will only adjust when they're supposed to adjust and when they're set to adjust. So if somebody bought an ARM, say in June, and they got a 5-1, they're not going to have their first adjustment for 5 years.
Okay.
So that's a very big window to wait for rates to come back down and then refinance your house.
Gotcha. So from an ARM, can you go back to a fixed rate mortgage at any point?
100%. You got to wait 6 months after your purchase.
Okay. Gotcha.
That's a Texas law.
Gotcha.
Yeah, you can refinance at any time. You just have to wait 6 months after the loan closes. So let's say, I mean, you could refinance your house every 6 months if you wanted to. I'm not sure why, but you could.
All right. To finish up these questions, where do you see the real estate market, especially financing wise, going into 2023?
Man, I'm excited. I'm a glass half full. I'm an optimistic guy. I wake up each day and I think today's going to be better than yesterday.
I like that.
I just, I don't think anybody has a crystal ball. Honestly, if you would have talked to somebody in September, they would not have predicted 7.5 to 7 3/8 interest rates for a conventional loan. They just wouldn't have. They didn't think we were going to get there. A lot of people believe that the market is telling the Fed we can't handle higher interest rates.
Yeah.
For a lot of reasons. One, the economy. And two, you've also got to think about the Fed. They're going to have to refinance their multi-trillion-dollar debt at some point. They're not going to want to refinance 2 and 3% debts at a 7 or 8% interest rate. They're just not. So because of that, I think we're going to see a little relief in the first quarter of next year. How much? I'm not sure. That's just my guess. But again, I mean, I understand interest rates are high, and I'm not going to be the kind of guy that says you should have seen what your parents bought in 1980 or 1990. That's not realistic. Inflation is at a record high right now, although it did drop last week to 7%, and we did see some relief on interest rates. How soon it'll level out, I don't know, but I always tell people it if you find a home that you fall in love with and you can afford it at 7%, how much more are you going to enjoy your dream home, whether it's 6 months or 1 year, when you refinance it for a 5 or a 4% interest rate? Like if you can afford it, at the worst times, then you can enjoy it during the best times.
There you go.
And at the end of the day, I tell people there are two common denominators between wealth and people in America that have wealth, and that's home ownership. Nobody's ever gotten rich renting or anything like that. Anybody that has ever made something out of themselves with money has owned a house, because it is the number one asset that usually doesn't decline in money. And I think the real estate market has insulated itself enough after the debacle of 2008
Yeah.
that I don't think we're going to see a crash. I just don't.
Awesome. And here goes a question from Megan. Why is it that renting I get approved to pay $2K a month, but a mortgage I can't get approved for, say, $1,300 a month?
A lot of that could be, a variable of things. I'd say they probably don't look at your debt to income as much as buying a house does. I'll use the example of when you're buying a house. If you tell me you make $10,000 a month, but you actually make $6,000, we're going to verify your income. When you go buy a car, they pull your credit. You can tell them you make $10K a month. They're not going to verify your pay statements. They're going to sell you a car based off of what you tell them you make a month. So the ability to repay rules are much more strict when it comes to buying a house rather than renting an apartment or buying a car. And that's simply because if you can't pay it, they'll just kick you out and then they'll put it on a collection.
There you go. And I can say, rent versus buying is completely different, especially with the way, renting a house. I mean, you're renting from an individual, a single person. They get a say in how much they rent it out to you, for how long, and if they want to approve you or not.
Average rent in Lubbock, I think, is $1,875 a month or something like that.
Yes, depending on what area you live in, of course.
Yeah.
And then one last question for you.
Okay.
Are all mortgage loans, whenever we are selling houses,
mm-hmm.
are buyers able to assume a loan or no?
Assumable loans, that is all based on the current mortgage company.
Okay.
So if someone wants to assume a loan, they need to have the seller of the house contact their current mortgage company, and then that current mortgage company will decide whether it's assumable or not, and then they'll go through that mortgage company for their loan.
Gotcha. Well, that was pretty much all the questions that I have been asked the past couple of days to ask you. The viewers that are on here, do y'all have any other questions that y'all would like answers to? We'll give y'all a couple of seconds to type them out. I think we got them all answered. I'm going back through the queue real quick.
Yeah. Let's see here. I don't see any other questions on there.
I do not either. So I guess we'll go ahead and call it there. Tyler, if anyone does have any other questions for you, how can they reach you?
So they can reach me on my cell phone. It's on any time of day. That's 432-266-2464. They can also send me a message here on Facebook. You can look me up, Tyler Hogan. You can also look up the Lone Star Ginger Lender. I'm on TikTok, on Facebook. So yeah, they feel free to reach out at any time. And I always tell people, the journey looks different for everybody. So let's say you reach out and you apply and you get a credit score of 560. Well, that's not the end of it. I don't tell you bye, kick you to the curb, and send you to somebody that's going to charge you to fix your credit so that you can buy a house, when it's like I've got to save that money to buy my house. I help you along the way. I give you ideas and things that you can do to increase your credit score so that we can get you there. So it's really a team game from the beginning, and I'm just a co-pilot. It's your house, it's your money, it's your dream. I'm just here with Austin to make sure that you keep the plane on track and we don't get off course.
Love that. Love that. Well, Tyler, I can't thank you enough for joining me on this live video today. I hope
Absolutely.
that everyone gained as much knowledge as I did going through all these questions.
Yeah.
If y'all need anything at all, you can reach me phone or text 806-773-0136. Once again, my name is Austin Brown with Raptor Realty Group, Tyler Hogan with Prime Lending. Y'all have an amazing weekend and y'all stay warm out there.
See y'all.